This is Tim Fergestad with Oak Street Assets. We're excited to have one of our partners here today, Larissa Greene with Advanta IRA. She's going to discuss what Advanta and she does to help investors. You wear a lot of hats, actually, I believe, so I'll let you talk about more of what you do with Advanta.
Great. Thank you so much, Tim. Thank you so much for having me today. So my job at Advanta is business development, essentially, but I also do education and marketing. I do a lot of networking for the company. When I started a little over 12 years ago, I was really just doing a little bit of everything, helping people open accounts, but doing transactions. So basically helping them make their investments, receiving income and making sure it was deposited properly as income, whether that was a dividend check or an interest payment or whatever it might have been. I also help clients pay expenses on behalf of their retirement accounts. And then about 10 years ago, I would say, they asked me if I wanted to do networking and education. So I started doing that. So I do a lot of just different little educational pieces, whether it's something like this, or I spoke at a local RIA or real estate investment club on Tuesday. Actually, I spoke at two, one during the day and one at night. So I do a lot of networking and education for Advanta. I really enjoy it. I've learned a lot from doing these educational pieces, but also with the networking, because I meet so many people that are doing so many amazing investments. And so that has helped me grow personally as well. And I've just really enjoyed my time at Advanta. I'm a lifer. Sometimes I get an email from somebody that says, "Hey, Larissa, are you still with Advanta?" And I always reply, "I'm a lifer. I'm here."
Excellent. That's I'll skip ahead to one of my comments or questions I had for you. That's I think one of the things that's special about Advanta is I've had investment or retirement investment accounts elsewhere with other custodians, and the turnover and the different people on the teams is a challenge. And so that's one of your strengths for sure. That's really appreciate that consistency in the team.
Yes. Yep. It's great. It's great for all of us, really. And we just to have this opportunity to really build relationships among the staff, but then also, of course, people that work with us, just like you, Tim, having consistency and as far as who you can reach out to and which of us can help you with different things, but really we can all answer questions. And so I think that's really something that we really excel at.
And correct me if I'm wrong, but you still generally have a dedicated account specialist for each individual has a single point of contact.
We certainly do. And that has really helped us grow our business, because when somebody reaches out, when somebody has clients they want to refer and they know always who to reach out to, it's a huge benefit. And it's a big benefit for the client too, because whether you have questions about making an investment, have you received income on that investment, how do you pay an expense, you're always reaching out to the same person, which is great.
That's, in my experience, that's really important. I had some of my investors have complained about that with their custodians as well. So can you explain a little bit about the different types of retirement vehicles people use, the types of accounts you set up, and the different names for them? Because I think people get confused about the checkbook and self-directed, et cetera.
Yeah, that's very true. A lot of times people say, I need this to be a checkbook IRA. Is that still a traditional? And it is. Checkbook IRA is a simple term that we use just to really define the structure of the account. So when you have an account with us, when you set up an account, it's going to be a retirement account just as you would expect. So if you have a traditional account with your brokerage firm, that is just really explaining the type of taxation that account receives. So a traditional IRA is a pre-tax account. A lot of times they're rolled over or moved over from an old employer plan, and they receive pre-tax money seamlessly. And so if you had like an old 401k or a TSP or 403b, and that money was pre-tax, it's typically going to move to a traditional IRA with Advanta. And sometimes people will say to me, I don't want to open a traditional IRA because I want to invest in alternative assets, not traditional assets. And that's not the way we're using that term. We only hold self-directed accounts at Advanta, so you're in good hands there. But we're going to match you up with the account that makes the most sense depending on where your money is coming over from. So if you have that pre-tax account, it's going to go into a traditional IRA. If you have an after-tax account, whether your 401k had after-tax money, your TSP had after-tax money, or you have an existing Roth IRA that you're moving over, then we're simply going to open a Roth IRA for you at Advanta. And there's some exceptions here when people want to move from pre-tax to after-tax accounts, but typically you're moving to a like-treated account as far as tax purposes are concerned. And so once we get that account established, now you have some options as to how you want to structure this account. And you can go with checkbook control, or your investments can be made directly through the retirement account. And when we talk about checkbook control, we're talking about using an entity that you form specifically for this retirement account to give you checkbook control. And that's either an LLC or a trust. We usually see single member LLCs more often than we see trusts, just for a few different reasons. But if you were going to go with an LLC, for example, you would form a brand new LLC for the purpose of the IRA. So it can't be something you have existing. You can name it whatever you want. We don't usually want to see your IRA's name, your name, or our name in the name of that LLC. But let's say you name it Sunny Skies LLC. Then Sunny Skies LLC will be owned by the IRA with the IRA as the member. You could be the manager. And then we essentially help you fund that LLC. And that checking account for the LLC will now have retirement funds in it. And then you're free to write checks for your investments, receive income, pay expenses, write checks for capital calls, all from that LLC checking account. And that gives you checkbook control of the account.
Can you talk a little bit about when people might use that type of account versus a standard self-directed IRA?
So it's got its pros and cons, just like everything else. If you're comfortable with checkbook control, if you want to be able to do a deal over a handshake and a cup of coffee, as I like to say, then you might look at checkbook control. If you're doing a lot of deals, or if you're doing a lot of short-term deals and you want to be able to control when that money goes out and when it's received back to a checking account, then that might make sense for you. People will typically do it when they're dealing with something where they need quick access to that money. So if you're going to an auction to buy real estate, for example, if you're meeting deadlines last minute, things of that nature, then checkbook control might make sense. It does also help you save on fees, because you have your IRA here at this level, you have your LLC right below that, and then any number of investments within that LLC that you choose. But when we look at your account, we are just helping you with record keeping for the LLC. And so we're only charging you for record keeping for the LLC and IRS reporting. However, the cons that go along with that is it is much easier to engage in a prohibited transaction when you have checkbook in hand. So you want to feel comfortable with the rules, understand what those are. It's always good to get a professional opinion with an attorney and a CPA when you're looking at something like checkbook control, because I consider that like ultimate control of the retirement account. And so if you're not 100% comfortable with the rules, for example, then that would be something definitely to consider before making that decision. But the good news is that you don't have to do it right away. You can decide later on to create an LLC and have checkbook control. So if you want to start out with us helping you make investments, learning about a self-directed IRA before you dive into something like checkbook control, you can do that down the road.
Okay, excellent. And it is important to note, I think, that as a custodian, you guys protect the tax advantages of the account and avoid prohibited transactions, whereas there's a lot of rules. And if you don't know what you're doing, you could accidentally work on the project you're not allowed to, or something like that. And now your entire IRA becomes taxable.
It does. It becomes a taxable event. And I think that people really should consider making sure that they're asking us the questions and stuff. So even if you have checkbook control, you still have an account manager and you can still ask that person questions. And so before you make those investments, you could call us and say, hey, I'm thinking about doing a loan to my son, for example. And then we would say, no, don't do that. It's prohibited. But typically, once people have checkbook in hand, we don't hear from them often, but that's something to consider. And we actually do let you know that we do our very best to help you with prohibited transactions and disqualified persons, but ultimately it is going to be up to the account holder. So you want to make sure you're asking those questions when you're looking at investments. And that's true whether or not you have checkbook control. And also, we are bookkeepers. That's what we do. And so if you go to checkbook control, you're taking us out of that role of bookkeeping. And so you want to make sure that you're comfortable accounting for everything down to the penny in and out of that account. And that will be super important.
All right. I'd like to point out that most of our investors do not have checkbook control over their accounts. They just set up self-directed IRAs or IRAs with a custodian, and then just have the custodian invest on behalf of the IRA, which is theirs, into the individual investments. And we can circle back to some of the rules and things that are and are not allowed later. But I wanted to step back to, you said, I want to invest. I don't want to invest in traditional IRA investments, right? And so a traditional IRA is not the same thing as a traditional vendor, right? Say Vanguard or Fidelity. Maybe you can talk about some of the different investment options that Advanta allows people to have. It's a very powerful strategy, and why it's so popular.
Yes, it is very powerful and it really allows you to truly diversify. So the first thing I want to point out is this is not an all or nothing strategy. You can move over just what you want from your brokerage account in order to make the investments that you choose. And that is pretty typical. Usually we will see people moving over just what they have in store for an upcoming investment. So they might say, hey, I have 50,000 or 100,000 that I want to invest with this deal. And they just move that amount over. And that's absolutely fine. You can absolutely do it that way. And then as far as what you can do, it's just about the sky's the limit. There's only two things you can't invest in: life insurance and collectibles. And then outside of that, as long as you're not dealing with disqualified persons, and as long as you don't have a current personal benefit, you can make those investments. So I always like to say, like when I'm speaking to a group, sometimes it's 50 people, sometimes it's 100 people. We can all go around the room and name an investment, and it's likely that we'll be able to do most of those investments in our retirement accounts because there are so many things that are allowed. The IRS hasn't given us a list and said, here are the things that you're allowed to do. Instead, they just gave us that very short list of things that you can't do. And when you're looking at something like that, the more common investments would be things like buying real estate. So whether that is through a syndication where you're a limited partner and you're less hands-on in the deal, or you're partnering money to buy commercial real estate, or buying a single family property for long-term or short-term rentals. A lot of people do private lending. That's what I like to do with my self-directed account, where you're lending money in the form of a mortgage or a deed of trust, but it could also be unsecured. You can invest in companies. You can invest in local companies like breweries and restaurants and things of that nature. And so the list truly does go on and on. And actually, my partner Corey is going to do a webinar coming up here shortly, and there's one in our archive as well, where we talk about the truly unique investments we've seen: movie projects, cattle, alpaca, racehorses, airplanes, 18-wheelers, all kinds of transportation companies. So it is truly an opportunity to not only diversify, but invest in what you know best.
Not be trapped only investing in those funds that Vanguard or Fidelity restrict you to.
Yes.
And could you talk a little bit about some of the other accounts too that people can use that they may not be aware of in their pre-tax?
Yes, there's a lot of opportunity. Yeah. And a lot of times people will say to us, I don't have a Roth IRA, so I can't self-direct it. And I'm not sure where they've heard that before, but if it ends in IRA, it can be self-directed. So of course you have traditional and Roth, but you also have SEP IRAs. And whether you are the employer for the SEP or if you're an employee for the SEP, because the really cool thing about SEPs, you can open that wherever you want, and your employer can continue to make your contributions for you. Simple IRAs can be self-directed in the same way. Solo 401k. So if you are a sole proprietor and independent business owner, and it's just you and your spouse or you and your partners, no employees, but you can hold a solo 401k. If you hold a 401k and you're self-employed elsewhere and you want to move off a portion of that money, keep it in the 401k, and still do some self-directed investing, you can do that. We call that a record-keeping account. You can also self-direct a health savings account or an education savings account, or sometimes they're called CoverDells or CISAs. Those accounts have the same rules as qualified plans, and so you can self-direct to those accounts as well, and we can help you with that.
And those are all great. Some of those I didn't know about. And again, this is why you work with an expert, right? You want to reach out to somebody like Advanta and Larissa. What are some common misconceptions around investing with retirement funds? You've mentioned some of them, but are there a couple that stand out?
Yes, a lot of times people think this is a loan from their retirement account to avoid a distribution. So basically saying they don't want it distributed, but how long before my money has to be back in the account,
Right.
so that it's not considered a distribution. This is not a distribution. It's an investment of the account just like any other. I think it's very easy for us to think about stocks, bonds, and mutual funds in our retirement account because that's pretty typical or most common. But we don't think about how those investments are held. We never consider that those might be a loan from the IRA because they're not, but because it's so commonplace, it's set it and forget it. But this account these assets are going to be held in this account just as they are with your brokerage firm. So your brokerage firm, when you get a statement, it usually says for benefit of or in trust for or something like that. And so when we help you with an investment, it's an investment of the account just like any other, and we title it as such because it's an asset held within the account. And so when you go to your statement with Advanta, you're just going to very simply see that investment in there, and that income is going to go back to the account just as you would expect it to. So this is not a loan. It doesn't have to be paid back in any certain amount of time. It's just based on the investment you're making. I know Tim and I were just talking about that longer investment structure. And so if it's a 2-year investment, a 5-year investment, a 10-year investment, all of that is okay. Sometimes we see people buy property in their retirement account and they plan on holding it for the long term. We've had clients, we've been in business a little over 20 years. Actually, it's almost 21 years now. And we've had clients holding real estate for that whole term because that is their plan. They're in it for the long haul, and that's absolutely okay.
All right. So what are the common questions or challenges people have when the setup questions, the paperwork, what qualifies the process?
It's really easy. It's an application packet that we can send you a link to online, or you can complete it as a PDF. It's up to you. And then we help you transfer funds. If it's coming from an old 401k or old employer plan, we give you the information, but you do unfortunately have to reach out to them because they won't speak to us. But we'll give you everything you need in order to initiate that rollover. When you're looking at a transfer, so between IRA and IRA, we have you complete our form and then we submit it on your behalf. And then while we're waiting on funds to come over, we can help you with the investment paperwork. So if you have an upcoming investment, a limited partnership agreement, a subscription agreement that you want to send over to us, we help you make sure that everything is properly titled in the name of the IRA. We have you approve it through DocuSign. So we want you to approve it because we're not doing any due diligence for you on the investment. So we want you to make sure that the investment paperwork shows the agreement that you made with the provider. Once you approve it, then we actually reach out, get a verbal confirmation from you that you're ready for the money to go out of the account. And then you're all set. The money goes out and we make the investment. Your statement now shows that investment and we receive the income. So it's a little different than investing in stocks with your brokerage firm because it's either done at a push of a button or you have an advisor who sets up those different allocations for you. So there's more paperwork on our end because we need your permission to make that investment. But everything at this point is done over DocuSign. And so once you've approved it, money goes out.
Yeah, it's very easy when, and now the things are digitized. This is how I started, and not started, but some of my earlier investments in real estate were using retirement funds, self-directed. We bought rental properties and other stuff outright, as well as syndication investments. And I've used solo 401ks as well as self-directed IRAs. Very powerful, and it really lets you get true diversity, as you mentioned before, instead of being invested in real estate in the stock market is just a real estate flavored stock, and there's a lot of other asset classes out there available.
Yes.
Are there any rules you want to talk about, or like arm length transactions or things that you think the main ones that people want to know about, or you've already touched on it?
Yeah, I think it's just important to remember that you can't have a current benefit from an IRA investment. So when you're making an investment, you want to really look at that. Something that I usually tell people is if you're looking at investing with family, that's going to be usually the number one thing you cannot do. The only people that are not disqualified are going to be brothers, sisters, aunts, uncles, and cousins. And you still need to be dealing with those individuals at an arm's length basis. So investments for investment purposes, making sure that you're not involved. There's no sweat equity from you or people that are related to you up and down your lineal tree. So parents, grandparents, children, grandchildren, and then spouses and business entities of those. So usually I say if it's a third-party transaction, it's probably something you can do as long as you're not getting a current benefit from it, as long as it's benefiting your retirement in the future, and just making sure that you understand that when you're looking at an investment. So you can always ask the question, give me a call, send me an email, Larissa, is this an investment I can do? Typically when you're dealing with unrelated third parties, it is. And then the only other thing, Tim, I don't know if you wanted to talk about was unrelated business income tax and when it applies.
Sure, we can. I just wanted to first piggyback on what you just said is a current benefit could be a lot of different things. But for example, I know some people who are like, oh, I want to get a short-term rental in my retirement fund, and we can stay there once or twice a year. And I'm like, no, because you're currently benefiting from that.
That's very true. And I think there's confusion there sometimes because I know if you are a full-time investor, let's say, and you're able to claim a real estate professional for your tax purposes, I know that there is some leeway given when you have personal investments as to how often you might be able to use them. I'm not an accountant, so I can't go into that. specifically, but I know that there is some allowances given. When we're talking about your IRA, there are no allowances given. You can't use it for a day, a week, a month. That's completely prohibited. So this
Right.
is really not a second home or vacation home for you. That's very important. Another good example of the current benefit that I think sometimes people miss is if you were going to invest in a company, let's say, and they're going to give you a seat on the board, or they're going to increase your salary, or you're going to get some sort of monthly or annual dividend because of your IRA investment, that's going to be considered prohibited.
Right.
Another example of that is if you did buy, let's say you bought a condo to rent, and that condo is going to go in the rental pool, and you're going to have a third party managing that company and or that condo, and the company is just going to send you checks monthly or quarterly, whatever. All of that sounds great. But let's say that condo comes with a boat slip, and you're going to put your personally owned boat at that boat slip. Now that becomes a prohibited transaction. So just being aware of that whole current benefit situation and how it might
Right.
work against
Okay.
you.
And again, Advanta as the custodian protects you and your tax status for your retirement accounts. So it doesn't become taxable. So you don't break those rules. Although there is a tax consequence though, if there's leverage involved. You wanted to talk a little bit about UBIT and UDFI.
Yes, yeah, because I think it's little known, and it's important just to realize that sometimes tax does apply to your IRA, even if it's a Roth IRA. And that's something that I get asked about a lot. This one's going to be a Roth IRA, so that won't apply. And unfortunately, that is not the case. Now, it doesn't mean you shouldn't make this investment or that it would be considered prohibited by any means, but you need to be aware of it and talk to your accountant or your tax professional and understand when it would apply and how it will affect your earnings. So if you buy a piece of real estate and you use financing, you actually can do that. It does have to be a non-recourse loan, so you're not extending your personal credit or giving a personal guarantee for your investment. And it also does trigger unrelated business income tax in most cases. The only account that does not incur unrelated business income tax for debt financed real estate is going to be a 401k for whatever reason. And so when you are looking at making an investment, if you're going to use financing, you want to understand unrelated business income tax, or UBIT as it's commonly called. And so the way that works is that it is tax on the income related to the debt. And so it's not on the principal amount you invest, it's going to be on the income related to the debt. So simple numbers. Let's say that you borrow 50%, then 50% of your annual income on this investment is going to be taxable. That it is tied to trust tax rates. However, the IRA pays the tax, not you. And the IRA will get deductions for the tax owed. So you do get to take deductions first, then you have your accountant or tax professional help you calculate the tax. And then the IRA pays the tax. And I do have a form that shows like sample calculations, because I think sometimes they're like, wow, trust tax rates, those are really high, and they are. But with your deductions and depending on your income, it might not be as scary as it sounds, but only you can decide that. So you should be aware, run the calculation, see if it makes sense for you. Sometimes people say, forget it, I'll buy all in cash. And other times people say, you know what, that gives me more buying power. I'll get deductions for it, so I'm okay with it. And once the debt is paid off for a full 12 months, that tax will no longer apply. So if you're working towards paying off that debt, then that still might be a benefit, so that in the future you have that growing power also. The other time that it applies is when you're a limited partner or investing into an LLC that's using debt to purchase real estate. And I know you don't have control over this investment as a limited partner, but it still does apply. So if you're investing in private equity, a syndication where you're subscribing, or you're a limited partner, and the general partners or the individuals controlling this investment are going to buy real estate, they're going to use debt in order to do that. The limited partners that are IRAs, or the subscribers that are IRAs, are going to incur unrelated business income tax. The IRA will still get deductions, and so you want to be in touch with your general partners or the controllers to find out what deductions you're going to get to take. And then the IRA again will file an additional tax return or tax form to pay the tax. Something again to note is that if the debt is paid off with a full 12 months prior to the final payout, then any future after that 12 months, that unrelated business income tax is not going to apply. And typically the trend that we see is because in a limited partnership scenario, you have some sort of return annually, and it's going to be more minimal based on an interest rate. And then usually you see the bigger payout at the end of this investment, or at the upside. You're typically going to owe more at the end. So just something to be aware of.
Right. Okay, thank you. And just to start wrapping up here, Advanta has a lot of resources available, right? Can you talk a little bit about the tools and educational content you guys provide?
Absolutely. Education is a big part of our marketing and business development, and it has been as long as we've been in business. And so when we look at what we're doing and what we're talking about, we try to make it something where you're going to learn something and also, very relevant to the investments our clients are making. And so twice a week, we have a webinar. The webinars are no cost, no obligation. And we're talking about everything from investing in cryptocurrency all the way through to making limited partnership investments and what you should know. Everything is education based. And it's something where if you can't attend the live webinar, we archive everything to our YouTube channel so you can always check it out. You can register, and if you don't attend, then you'll get the recording as soon as it's available, usually within 24 hours. And then we also have a lot of guides on our website. So we talk, of course, about the different types of accounts, how rollovers and transfers work. You can download our guide on real estate and IRA. You can download our solo 401k guide. So there's a lot of opportunity to learn, and everything is no cost, no obligation. So I would encourage you to check out the website, advantaira.com, and you can, of course, reach out to me with any questions.
Excellent. Thank you. You got Advanta's, yeah, top notch. Everybody's competent and fast. That's another thing I wanted to point out is I've had some investors miss out because their custodians are too slow. Sometimes it's freeing up the delays from their previous IRA. It has to transfer their funds to the new account, but sometimes it's just poorly managed paperwork and a slow team. And Advanta is, yeah, very professional and very timely, which is very much appreciated. Thank you. Thank you for your great service. Is there anything else you'd like to share with investors?
No, I think we really
Okay.
covered a lot of the most touched on points.
Okay. How do you recommend people reach out or take any next steps on how to find out
They can
more?
reach out to me with any questions. If you go directly to the website, you can always fill out a request for information. If you do that, somebody will reach out to you and just let them know you want to talk to Larissa, and they'll send you my way. Or you could reach out to me directly. And can I share my phone number here, Tim? Is that okay?
Absolutely.
Okay. My direct number is 727-754-9963. Again, 727-754-9963. Unfortunately, that is not a textable number, but give me a call and I'm happy to answer any questions you have.
Okay, perfect. Thank you very much. I very much appreciate it. I look forward to working with you some more in the future. Thank you
Yes,
for
me
your
as
time.
well. Thank you, Tim. Take care.